What's going on, guys? Brian's here. Today is Wednesday, July 24th, 2024. What a day it was in the market. We had a nasty sell-off here. Market's down over 2%, both the NASDAQ and the S&P 500. Let's jump right into it. This is the daily time frame. We are now at the 50-day moving average that was mentioned in the video over the weekend as something to prepare for this upcoming week. I did not expect it to get here in the fashion in which it did, so I actually did not participate in this drop. However, I generally don't feel that much FOMO whenever it comes to missing out on a short trade. If the market was to be up over 2% and I don't participate, that usually ends up affecting me a little bit more. I don't know if it's the same for you guys. There isn't a clear sign yet to participate in a bounce trade. We need to wait to see some sort of confirmation. Whenever you see this type of selling pressure that's this nasty, I don't think we're going straight down to the 200-day moving average, but that is something to keep on watch. This will obviously rise a little bit more as it moves a little bit slower than the 50-day moving average for obvious reasons. Let's take a look at our trend line that we discussed over the weekend. We have it. It was broken here. This was the channel that was mentioned. Let's take a brief glance at the NASDAQ for a second here. This is a scary gap down. Just as what was mentioned last week, we had a gap down below previous support. In this case here, we had a gap down below some previous support levels. So this is pretty disgusting. Price sliced right through the 50-day moving average. Volume did increase here today. This is usually a sign of panic, and I generally like when there's a lot of panic. As we get some sort of a reversal trade, it usually comes in as everyone is running for the exit. An easy indication, or something that I generally like to look out for, is if the market gaps up above the 2-day anchored VWAP, and then if it retraces to the 2-day anchored VWAP, buyers are usually there to defend it. So in other words, let's just say the market was to gap up, then as soon as the market opens, it retraces a little bit. If there are buyers there, you can generally get a really nice update in the market. I will be keeping that on watch. Let's dive into a smaller time frame and get into the nuances of some things. This video will be pretty brief as I'm recording it pretty late, and things are actually starting to get a little chaotic for myself in my personal life. So I want to keep this pretty concise here. So this is our 15-minute time frame that you guys know I like to start out with. Let's take all of the studies off the chart and just pay attention to our gamma levels. You guys know in yesterday's video, this was a pretty decent short setup here. However, I downplayed it, as I have to admit, it's not something I was looking for. I did not participate in the short that I mentioned yesterday. I was looking for the long trade, just as I was looking for the long trade here on Monday. Price was in negative gamma territory this whole week so far. It was not able to reclaim the gamma flip. Bears had a little bit more conviction as we addressed the tone change last week once the market gapped down below these key support levels. Once we broke down 560, bears have had a little bit of wind at their back. The market has been in negative gamma. That can contribute to a little bit more of the aggressive selling. As we move forward here, I did mark at the beginning of this week that the negative GEX does get low below 540, so there's not as much negative gamma below this level. However, that was at the start of the week. Yesterday, we also pointed out the fact that the VIX was at 2 sigma. So now you guys can see what I was mentioning yesterday, that shorts had extra reasons to be short. VIX at 2 sigma support, the same time the ES or the SPY was at significant level. Again, you guys can just check out the previous video from yesterday. You guys will see what I'm talking about here. Here's that confluence for bears. They end up getting a major reward. It doesn't always happen this way for them. I completely ignored this trade. I want to make that very clear. I was aware of it and I still did not participate in this short trade. Not every single time you see something do you need to react. However, I am beating myself up a little bit today, as I did not point out in yesterday's video, as I was not aware of it until today. This is usually a sign that you're reaching some sort of exhaustion point, either in life or in the market, and you need to take some sort of a break. And I'm taking this as a sign for myself to take about a day or two off, maybe pick it back up next week here. But this is something you guys know I generally always look out for, the 50% retracement after a large move. This is the all-time high. We had this aggressive selling that happened last week. The market bounced 50% here, and I was not even aware of this when I did the video yesterday. This is something for over 4.5, 5 years or so, I would say I've always looked out for. So to miss out on something this clean, I think I did a video way back about a really nice short setup in which I took in the markets as we were at all-time highs. It was a similar situation here, and again, it's usually what I look out for. The same way in which I mentioned I look for these 50% retracements to the upside. We've talked about the 50% retracement to the short side. I just have become so conditioned to look for these long setups. So this was the setup you guys know on Monday's video, and we got rewarded for that bounce here going up. We got rewarded yesterday. Today, the market did not change its tune around 10:30 Eastern time after the market was open. We did not get a bounce, and price just continued to sell off. To show you guys where my head is at for a second here, I just want to show you guys, maybe you'll get a good laugh out of this. I was obviously not laughing. I didn't even have time to actually take a look at the charts earlier on in the morning. I had a lot of obligations for the day and just exhaustion is kicking in. I actually opened up this trade here. This is one, thank God it was just one MES contract, as I know to stay away from the full-size contracts if I know I'm not going to be that focused on the market for the day. This is 5 minutes before the market opens. I'm on my phone and I'm like, oh, look, we're at pre-market support. I remember on the SPY, I believe, let's take a look here. We had this levels here, which I can see on my phone. So I knew 48. I figured as bad as it can get will maybe be, instead of 48, it might be 47. And understanding that this is where support was last week, Friday. So I decided to just lazily buy those futures contracts without looking at much. And then coming in later in the morning and seeing this and saying, wow, this is pretty bad. And then around here, I decided to pull the plug, and I'll show you guys on why I pulled the plug here. So this was a nasty loss for myself on MES. And then even worse was the micro NASDAQ futures. Same thing, decided to buy. I like to buy the NASDAQ and the ES in the same day if I think anything is going to happen in terms of a decent sized move. Same thing from my phone, decided to buy a contract here, checked back in. I think I saw that there was some sort of support again from my phone. I figured, let me just buy another contract. Then I decided not to pay attention to the markets. I come back in later in the day and I see how bad things are looking. And this is when I pulled the plug. More importantly, I'll show you guys why I decided to pull the plug there. If there's anything you guys can learn from me, from my trading from today, it would be this. Why would a trader decide to close out on a losing trade? I think all in all, I ended up losing about $1,100 or so for today. So it is pretty bad for me because I don't like to lose more than 4 digits on a day trade. That is, if it's a longer term swing trade, that's totally fine. But for me, I have to punish myself by usually having to sit out from a day of trading. I have to cut back on something. I'm balancing multiple projects. I'm co-producing a few short films for the later half of this year, mixed in with a ton of meetings, mixed in with trying to do as many of these videos, as well as help as many of you guys in the comments and the QTA Discord. It's the midst of summer. There's been no vacations for the year. I have no vacations on the calendar for this entire year. It's pretty much going to be work probably up until the middle of January for myself. At some point, you do need to take a break. I will try to continue to do these videos as best as I can, as I think you guys can learn from them. And the whole point, again, it's not about what a particular trader does. In this case, myself. This is not about what trades that I take. As you guys see, I actually took a massive loss today by not being focused and missing out on something that I would normally catch or I would be prepared for. Possible scenarios and price action were discussed over the weekend. Even the price retracing up to this channel, these are not things in which I was aware of yesterday. And usually at the end of the day, you want to take a look at the daily time frame, or even at the start of the day, you want to recap by first assessing the daily time frame. I have not looked at the daily time frame since the start of the week on Monday. I have not really focused in on it. The information was here. And hopefully, if you're someone that's watched many of my videos before, you would have been able to capitalize off of looking for this 50% retracement, finding the confluence here, even after the video in which I did yesterday, showcasing that the VIX was at 2 sigma support. We had the confluence here with these gamma levels. We also had the intraday zone. It was all shared here. We have a little bit of a touch of this zone here on the ES. We had the obvious retracement here on the NASDAQ with the breakdown right in this zone that was covered previously. Now, why did I decide to cut my trade around here? Let's just jump right into the smaller time frame. Let's take a look. This is the negative gamma, the highest negative gamma strike for the Friday expiration. So if I were to turn off all my studies, turn back on all my studies, let's actually just look at a clear chart. What we're looking at is the quant trading app levels. This is the regular standard VWAP. This is the 9 EMA. So these are out of the box. Almost every charting platform should have these two. Everything else is proprietary that you see on the chart. So this level here, here's our 2-day anchored VWAP, this level here, and here's max pain for Friday. Once price broke down below the highest negative gamma strike for Friday, I told myself this is danger territory at this point. As we can see, there were no real buyers stepping up. I didn't see much capitulation in volume. The 9 EMA had also broken below this level and it continued to decline. Price was not able to hold up above this level. Then I took a look at, we have the break and retest. So let's turn back on our studies. And let's actually look at a clean chart. This is what it looks like on a 15-minute time frame. So yes, we're in a quant trading app buy zone, but we broke the highest negative gamma strike. 2 sigma is down here, so there's a high possibility that we head towards the 2 sigma level on the SPY. But if we take a look at the NASDAQ, this is what I was actually paying attention to. This was our break. So price sold off, and this was our retest. All right. So if you guys see this here, an immense momentum, no real buyers. We had one green 15-minute candle that happened right at the highest negative gamma strike. Remember, these gamma levels act as support and resistance levels, or supercharged support and resistance levels. So buyers did make some sort of attempt here, but it was not enough. So price broke right down. That is a clear warning sign. If I remember correctly, it's around here in which I bought that second NASDAQ contract on my phone. Price continues to sell off, and then it breaks right here. Right, so here's price selling, breaks this level, and then it retests the level. Once it retests this level, this is the setup for shorts. If price fails here, we see the rejection right here. They're expecting continued momentum to the downside. That is the break and retest setup, in which has been addressed probably a million times for the Quant Trading app members. When you have a break, when we have a break of these key Quant Trading app levels with momentum, when price is retested, traders are looking for continuation in that direction. This is our momentum, this is our break, and this is the continuation. Next, for you QTA members, take a look at the gamma profile for Friday. Be aware of where the 2 sigma levels are. Is there enough momentum to carry price down towards 2 sigma? What other earnings are they left on the calendar? Does the VIX have reasons to be elevated? Yes, it does. We still haven't even heard reports from some of the mega cap stocks like Apple, Amazon. Those are still on the horizon. The market is going to want to hear from them. Regarding this week, if we do see price get down to 2 sigma, then I will be looking for a beautiful bounce trade sometime next week. It may come. Apple has saved the market before it's happened. I can't remember how many times in the last 6 years Apple comes in with this random report and people will say Apple has single-handedly saved the market. That has happened before. Something to be aware of, guys. To be clear, we'll head back to the SPY. If we see the market get down to 2 sigma, and we see some sort of capitulation, or we see some sort of divergence, those of you in QTA know the divergence in which I'm talking about. If the VIX comes down here and then it comes here, it doesn't come back up to this high level, but the market drops down to 2 sigma, bounces and goes back down to 2 sigma, but the VIX does not go back up to this level, that is our bullish divergence. It is the first clear sign that I have always used to take on a massive risk trade to the long side. Keep that on watch, guys. Hopefully you learned something from this video. Even though I'm showcasing that I was not necessarily focused, I did not participate in this short trade. Hopefully learn something in the videos this week here. Leave a comment down below. Like the video if you learned something. Share it, and I'll catch you on the next one. Take care.